On this week's Tech's earnings agenda, we've got Netflix reporting tomorrow and then Tesla on Wednesday. For a preview of what to expect, we want to bring in Paul Meeks. He's Independent Solutions Wealth Management Portfolio Manager and a finance professor at the Citadel. That's pretty cool. Paul, welcome. It's good to see you today.
Always a pleasure.
All right, let's talk about what you're looking for. Netflix on Tuesday, Tesla on Wednesday. You feeling optimistic about either of these reports? What are you doing ahead of them?
I'm not doing anything ahead of them. I'm not particularly optimistic. You know, Netflix has had a huge move off the bottom. So is Tesla. Let's go to Netflix first because they're reporting first. Yeah, I still think there's questions to be answered about password sharing. That is a key component for them. Also, the success of the ad-supported lower-cost tier. We have a CEO transition and a morphing in the business model. And we'll see what happens. But I think right now, with all the angst still surrounding the stock, it's probably just a hold. If you own Netflix before the call, I definitely wouldn't buy it before the call.
Specifically on password, well, just specifically on password sharing, what would you like to hear from the company? That some of those people getting kicked off sharing passwords are actually converting into subscribers?
That's right, because we don't really have a firm and least announced plan on what's happening here. And of course, you're going to have some cannibalization in the business. You might have some incremental users, let's hope. We also don't necessarily know the pricing of those incremental users, whether they be in your family or not. So I still think there's some ifs, and it's worth talking about because that is a very big if going forward for revenues for Netflix.
And then Tesla?
So Tesla, same thing goes. You know, we've had a big move off the bottom. We're up 80% off the bottom, but based on mathematics and how poorly this stock did last year, we're still down 50% from the top. Now, there should be no controversies about what they report for their quarterly results because they've already pre-announced both production and deliveries. I'm more worried about the long term and what they say about it because we all know they very aggressively have cut costs. Now, they also had an analyst meeting not too long ago where they talked about significant efficiencies in manufacturing, maybe to bring their costs down. And so what is going to be that swap? Because the prices they've dropped swiftly, significantly, with the manufacturing efficiencies more on the come. Let's see what happens. I want to see what the going forward guidance is, but I don't think you'll see any kind of controversy about what they report this week.
Paul, we only have about a minute left. I know you think that the NASDAQ overall came too far, too fast, all of those technology names in the first quarter. What would it take for you to get more optimistic about them?
So I need to hear some inklings, at least. I don't expect anything near term, but maybe some green shoots as to a turn in the fundamentals of these companies in the second half of this year. And I also think that the biggest factor, this is the 80% factor. The other stuff is the 20% factor. I unfortunately feel that too many people have driven these stocks up based on the Fed pivot narrative. And I do think that the Fed will raise a quarter point on May 3 and stop. And that will take a headwind, at least, away from us. But I don't see a tailwind that's necessary to propel these stocks because I don't see a pivot until next year earliest. So I'm super worried about that and the fact that that and almost that alone drove the NASDAQ up 17% in the first quarter.